The views expressed by the speakers of CamaPlan podcasts are those of the speakers only and may not reflect those of Cama, its members, or employees. Cama does not guarantee the accuracy of information provided by these speakers. Professional advisors should be consulted before implementing any options presented. Cama absolutely does not endorse or recommend any individual or organization, including the speakers. Cama, its members, and employees do not accept liability for losses and/or damages arising from errors or omissions within, reliance upon, or any use of the information provided by the speakers. Individuals are strongly encouraged by Cama to conduct their own due diligence before making any investment choices. Cama does not act as, nor offer the services of, an investment advisor, CPA, realtor, or attorney. If tax, legal, accounting, investment, or other similar expert assistance is required, the services of a competent professional should be sought. Hello and welcome back to The Road to Financial Freedom, a podcast that allows experts to share their stories and secrets to unlocking their financial independence. This podcast is brought to you by CamaPlan, a self-directed IRA administrator in Ambler, Pennsylvania that is focused on educating investors with different ways to grow their retirement savings faster through alternative investments. And of course, we are continuing to record our podcast remotely. I'm Jess Jones, CamaPlan team member and your podcast host. This week, our guest is Managing Director of 3 commercial real estate funds at Wellings Capital, co-host of the podcast How to Lose Money, a blogger and contributor for Fox Business and Bigger Pockets, an author of 3 books on real estate investing, and an active investor. From flips, subdivision development, multifamily, self-storage, hotels, waterfront lot flips, a residential real estate marketing firm, and more, he is no stranger to the ins, outs, ups, and downs of real estate investing. His journey to financial freedom began after a stint in Ford Motor Company, co-founding and selling a staffing firm in which he was a finalist for Michigan Entrepreneur of the Year, founding multiple investment and development companies, and even appearing on HGTV. His extensive career as an investor has contributed to the honest education that he provides his listeners, fund investors, and readers. When it comes to being a successful investor, he believes that it is important for investors at any level, from brand new to entrepreneurs to executives, to find their big why. So please welcome, without further ado, Paul Moore to The Road to Financial Freedom. Paul, thank you for being here today.
It's great to be here, Jessica.
Thanks so much. I'm so excited to learn more about what you do and your insanely interesting background and, what you've done to get to this point. So let's jump right in. So tell me some more about your background, where you were born and grew up and where you went to school, what you studied, if it's any different from, what you ended up doing in your career. I'm always interested in those things from our guests.
Oh, it's quite a bit different for sure. I actually regret a lot of my past, and I'll tell you about that in a few minutes. But yeah, my first mistake was getting an engineering degree. And I didn't, I thought, well, I'm great in math, science, physics, etc. I think that's the natural thing for me to do. But I didn't know that I was more of a marketer and a sales and marketing person at heart, and eventually, an investment allocation person. It took me about 30 years to figure that out. But I really don't regret the path I took in one sense, and it gave me a lot of variety along the road to real estate investing in particular. But the regret I have is that, I chased a lot of shiny objects along the way, and though I can now see how some of them fit into what I'm doing now, a lot of them were real distractions. And if you look at the wealthiest people in the world, the billionaires, a lot of them chose a path when they were very young, and they stayed on that path. People like Warren Buffett, who decided to be an investor before he was 10, or Bill Gates, who wanted to be a computer person from a young age, and they said no to 10,000 distractions along the way. And that's what I've gotten good at now, but I'm in my 50s, and it's taken a long time to get to where my default is saying no.
I get that completely. I have told you in our discussions leading up to this podcast, I majored in theater, English, things that I just didn't think, when I came out of the workforce or came out into the workforce, I was kind of lost, kind of confused, and kind of regretting what I had majored in. And then I took a look at, what I was able to do once I joined CamaPlan, which is a financial institution, and how I was able to take those degrees and actually do something with them within a completely different field that I would never expected to find success in and what I had majored in. And I think it's interesting that a lot of our guests have similar backgrounds to me in that way, but also similar in that they all agree, you know, it's eventually that idea of coming to find your focus when it comes to being a successful investor and what their personal definition of success actually means to them. So I'm really curious about those sorts of things and about, you know, how your backgrounds intersect, how they differ, because I have heard a couple of people that have said, I always knew I wanted to be involved with money. And for me, I think I've bounced around from like horses to theater to English to writing to doing podcasts. So it's always interesting to hear the mixed bag of people. So I think you and I are similar in that way too, Paul. How did you first get involved in real estate investing then?
Yeah, the year was 2000. We had sold our company to a publicly traded firm in the late 90s, and I moved my family from Detroit to the opposite extreme. We bought the top 120 acres on the top of a mountain in the Blue Ridge Mountains of Virginia to raise our kids, and we were running a nonprofit organization, and honestly, I got bored, and my friend had moved to town, and he was looking for something to do, and we thought about trying an auto dealership. And then we found out we could buy houses for supposedly pennies on the dollar at the courthouse steps. We went and we bought our first house that we ever bid on, and it went really well. And we thought we could do one of these, like we could do 2 of these a month at least. And so we jumped in. Of course, we made a lot of money on that deal, but we lost money on 2 of our next 4 deals. We found it was a lot harder than we thought, but that's how I got started.
That's awesome. And, you know, the saying you can't know unless you try, I think really does apply to things like real estate investing too. Yeah. So besides your friend, was there anything else that really inspired you then to become an entrepreneur, or did it really just come out of this idea of, you know, I'm here, I'm, for lack of a better word, bored, and I want to do something different? Or was there any book or publication, person who inspired you?
Yeah, the middle part that I missed, that I passed over, is while I was at Ford Motor Company for almost 5 years, I found myself from the month after I got there tinkering with things in the evenings and weekends. And I realized after a couple years at Ford, though I really love Ford and I love this career path I'm on, I really think I might have been born to be an entrepreneur. And so when I accepted that, I spent my last few years at Ford trying to figure out what to do exactly. And I was inspired by a guy who I went to grad school with. I got my MBA with him at Ohio State. And then we actually both went to Ford, and he got a really high paying, wonderful job. And in 13 months, he was out to be an entrepreneur. And so he was my inspiration, and he still is today.
That's really awesome. So it sounds like there is a ton of really interesting moving parts in your story. And I'm curious too, you know, you say, I realized that I was born to be an entrepreneur, even though I loved working at Ford. What do you think in terms of, I have this spark inside of me, in the same way that a lot of my friends who I went to theater school with, who probably I've seen work so much, I don't want to say so much harder than I did, but in ways that like definitely said to me, oh, well, inside of them, they have that spark for being an actor too. What do you think, what components in terms of your own characteristics or the characteristics of an entrepreneur that you believe to be are successful make up a successful entrepreneur? Like make up someone who has that spark inside of them and say, oh, well, yeah, I was born to do this. Yeah.
So in my summer job between my 2 years of MBA, while a lot of my friends went to investment bankers and financial planners and factories to do logistics, I had the good fortune of getting to make Ghostbusters toothpaste and mouthwash for the summer.
Wow.
And that may sound crazy, but I went to work for a guy who had graduated with his MBA about 5 years before, and he was looking for an intern. Mm-hmm. And he was actually creating Ghostbusters mouthwash as a test on a test basis. Wow. And he was also doing Ghostbusters toothpaste. And we also, so I basically got to work for him for that summer and then actually a good bit of that year. And I got a taste of what it was like to have 5 or 10 employees and be a startup, and I really loved it. And he's gone on to do some big things as well. He owns Barbasol shaving cream now. Believe it or not, he bought that brand, which was a big deal. But at any rate, I think that, entrepreneurs, a good one will stay focused and say no to shiny objects. And I've already told you that I failed at that. The problem with entrepreneurs is we're tempted by so many things because we always want to be in the startup mode. I think a great entrepreneur knows how to make the transition from startup mode to running the business and then stabilizing it and staying with it. I think a lot of entrepreneurs love the startup. They love that ramp up. They love that rush of acceleration, but then they don't know how to manage it along the way. An analogy would be, flying a jet. A jet has to be designed with this enormous horsepower to fly from New York to LA. But that's not really true. It's the takeoff that needs almost all that horsepower. To actually cruise at 32,000 feet, they don't need as much horsepower at all. And so it's the same with an entrepreneur. We get a rush. It's sort of like an addictive rush from that startup phase. The problem is if you keep starting stuff, you'll always be in that startup phase. You'll always have that high risk of failure. You'll always be working those 80-hour weeks. And I think a great entrepreneur knows how to make that transition and stay with it.
Absolutely. I think that that's an excellent analogy and a great way to put it, Paul. Thank you. So I'm interested in, you talk about you had some trouble with distracting yourself with following those shiny objects, and you've moved from Ford to co-founding and selling the staffing firm to becoming a real estate investor yourself, and now you're building and co-managing a multifamily development. And what were some of the big major takeaways for each of those different steps for you that maybe taught you a lesson or led you to the next level, that got you to a point where you were able to kind of remove those distractions and focus on, okay, well, this is what I want to do, and this is how I'm going to execute this plan?
Yeah, so there's a book called The E-Myth, and a lot of entrepreneurs know about that book. And so while I was at Ford Motor Company, I think I had a little bit of the E-Myth going on, which is I can do this component of this staffing firm, but when I actually got into it and realized it was more about running a business and managing people, I realized I was sort of handicapped in that I didn't have the piece about managing people and running the business and systems and accounting and all that. So I had to learn that. When I was flipping houses and then flipping waterfront lots at Smith Mountain Lake in Virginia, I realized that, and this is a sort of a different aspect, but I realized I wasn't really building true wealth. I was flipping houses and I was making money, but then the money got either plowed into living expenses or invested in the next deal. Now, Jessica, I think true wealth is actually owning assets that produce income. And, Warren Buffett said, if you don't learn to make money while you sleep, you'll have to work till you die. And I think that's what a lot of house flippers do. And so after a couple other gyrations along the way, I realized that owning assets that produce income should be a good goal for all of us. And so Wellings Capital was launched to own assets that produce income and to give investors, accredited investors, access to those type of assets that throw off income. And I'm so happy to be doing that now.
Absolutely. I think that that's a great point, that in looking at myself, I'm a newer person when it comes to the scene, a new investor when it comes to the scene. I think of a lot of people my age who may be getting started and trying to figure out what are my options. The fact that there are those living expenses and in years that aren't 2020, going out expenses, entertainment expenses, subscription expenses now, all of those little things that make up where that income also gets funneled to can really greatly affect that idea that you were saying, building that true wealth. So
right.
I think that that's something, I wasn't always considering. And I think that that is a really interesting point to bring up. And I'm glad that you bring up Wellings Capital, because I do want to talk about, what you guys do, who a typical client of Wellings Capital is, and how they benefit from investing in real estate funds. Because if I have this correct, you made the shift then from multifamily syndication to establishing these commercial real estate funds.
Yeah.
Great. So what then is, I guess, a three-part question. What inspired you to make that shift? What is Wellings Capital? And can you talk about a typical client and what they can expect from Wellings Capital?
Yeah, what inspired us to make this shift, in part, there was multiple things. But one thing is multifamily, which I wrote a book called The Perfect Investment. Humble title, huh? And I wrote that book about apartment investing. The problem is multifamily investing in anything is not perfect if it's overpriced. And that was the one thing I didn't hit real well in the book. Chapter 8 of the book lays out all these reasons, chapter 4 and chapter 8, for why multifamily is the perfect investment. But I didn't hit on the fact that if it's overpriced, it's not at all perfect. And that's what happened. So that motivated us. Another motivator was dozens of investors I talked to. These were real estate investors who were really dentists, doctors, IT professionals, attorneys, people who had inherited money. And they would call me and they would say, here's a typical call from a guy in Seattle. He was a periodontist. He said, my wife's an orthodontist, I'm a periodontist, and I'm building up 20 great cash flowing houses to try to replace my income. And then he sighed and he said, he said, I am taking calls with painters between surgeries, and I'm screening tenants in the evening, and frankly, this is driving me crazy. And I'm thinking, yeah, 20 houses would drive you crazy. And he said, right. But I'm only on the third house. And I said, oh. He said, I've got to figure out a way to do this passively. And so the most motivation and the inspiration for us is realizing the wealth building capability of real estate, realizing the tax slashing nature of U.S. real estate, especially commercial real estate done right, but also realizing that most people who watch HGTV or figure out, how to flip a house or how to get a few single family rentals, they're not going to get access to that without a way that completely disrupts their main income source, their family. They're spending weekends, evenings, vacations, all kinds of spare time trying to make this work, and their returns are less than satisfying. A lot of them have heard about the great wealth building and tax cutting opportunities from commercial real estate, but they have no idea how to get access. Wellings Capital was created because we don't think it has to be that hard. We think that by giving investors an easy on-ramp to large commercial real estate projects and diversifying them across, let's say, 50 or 100 different projects inside of our funds, we're giving them a lower risk, easier way to get involved. We are a due diligence company. We vet operators very thoroughly. We spend months. This morning we were talking about one we have been talking to since July 10th, and the soonest we'll invest with them is mid-March. We spend months vetting them, getting to know their company, their investors, their staff, dropping in unannounced on facilities. We really get to know them, and we do all the work that investors would do if they had the knowledge and the time to do so. We do that on their behalf. When they access our fund with $50,000 or more, they're getting access currently to 76 assets, but it'll soon be over 100 assets. And we're spreading their money across different assets, geographies, asset types, and operators, and different strategies as well.
That's incredible. Wow. Thank you for sharing that. I think that offers investors with a lot of insight. You said, knowledge and experience, giving them that extra window into working with someone who has that knowledge and experience of the industry, where they may have their weaknesses. People at Wellings Capital have those strengths. And I think that's really interesting, especially because it does bring up a couple of questions for me too, is, you mentioned you're a due diligence company, which I think is incredible that, you do focus on making sure that this investment is going to honor and support your investors. So what exactly, you talk about different geographies, different different places dropping in unannounced. For you as a manager, what differences have come up from when you were an investor, and what challenges have arisen? How have you kind of had to make those changes, and how has being an investor in your background helped with being a manager in that way?
So being an investor, it was easy, especially as hard as it was to get multifamily at a reasonable price. It was easy when we got an opportunity to buy a multifamily to jump on it. And as somebody in our position now, we are making the choice. We are in control. We have, $21 million in our current fund and millions in our prior fund. We have the opportunity to say yes or no, and our default is by far to say no. We kind of love saying no, because we know that it means that we're saving ourselves and our investors from a potential bad situation.
Right,
occasionally,
exactly. Mm-hmm.
What's that?
Exactly. Well, I was just thinking, you said, it's nice to say no. I think of myself and how I'm a young woman, and I think I'm kind of compelled, especially when I was younger, to just always say yes. And the ability to say no as I've gotten older has become such a freeing thing, and there's less of a negative connotation around it. So for your investors, having someone who can say no sometimes on their behalf, especially if they're new, and this is something that they don't necessarily have that knowledge for just yet, I think that's super helpful. So keep going.
I just thought of this. We say no so you don't have to. Okay.
Right.
Anyway. So, but seriously, as an entrepreneur though, think about it. Mm-hmm. As an entrepreneur at heart, I like to say yes.
Right.
And so it runs against my grain to say no to somebody. I was approached yesterday, actually the last 2 days, by 2 different really good opportunities. And the default's going to be able to, just say no on those, because we now know from experience that a lot of things that look good, if we haven't thoroughly vetted the operator, the project, the location, etc., then it's likely it'll turn out mediocre. We're looking for, the 80-20 rule, the top 20% of the anything produces the top 80% of the results. Well, that rule is fractal, Jessica, which means the top 20 of the top 20, that's the top 4%, will probably produce something like the top 80 of the top 80%. That's 64% of the results. And so we're looking for that top 4%. We've got lots of stories of how that's played out really well, and we're growing our thesis to continue to manage and manage that due diligence process better and better. Every year the bar goes up, which means it's even harder to find good operators. But when we do, we're really excited about it.
Absolutely. And I like that you bring up the fact that it does get harder every year. I think, there is more information that's accessible to people as years go by. So being able to do the research and the due diligence to suss out that information, what is good information, what is bad information, and having someone on your team as an investor who can do that for you, who can say no if they need to, is super helpful. And off of the due diligence point, the other question I have is, you talk about different geographical locations and diversification. So what are some of the, especially coming from the standpoint of a new investor, someone who's brand new to the scene, what are some major due diligence tips, especially for, long distance investing in other states or diversification that new investors should really keep in mind?
We just had an investor and his father drive 5 hours, prospective investor, to meet us for lunch and to return. And I think that's so good. I think it's so important to look in the eyes of the person you want to invest with. And, I don't know the exact number, obviously, but I think there are about 3,000 signals. That's body language, tone, wording, pauses, everything that are actually in play. The problem is we don't know consciously. Our minds do know because, they can do, 30 quadrillion calculations per second?
Yeah.
Our brain, and I'm going to call it gut feel, can ferret out a lot of those things, but we can't consciously know them. So honestly, a guy and his wife talking to an operator. That's a good point, by the way. Take your spouse, whether you're a man or a woman, take your spouse along. But I can say that a lot of times a man might be looking and listening to all the good stuff, all the numbers, all the financial gain. And they'll come out of that lunch meeting and the wife might say, I don't trust him. I don't trust him. I don't think we should do it. Men, listen to your wives. And vice versa, I'm sure. But my point is, there is a gut feel that's got to be part of the equation. If that's not there, no matter how good everything looks, run away. Yeah. That's a big one. I also say, find out how they speak about and to their spouse, their employees, the waiter or waitress, the flight attendant. Be part, get involved and get to know them. So those are some things that, might be part of the due diligence that people might not have thought of.
Oh, absolutely. I think you raised a lot of great points for, relationships in general, but especially relationships with people that you're going to partner an investment with, being able to know the person you are working with, the person that is handling your money, and trust them are two really key tenets, I think, for partnering, especially with investors and partnering in general. I think it's an interesting, really great point to bring up. If you've, I know I've asked you about yourself and what you think created your own spark for being an entrepreneur, but have you seen any common characteristics? I know you've worked with so many people over the years, common characteristics that you've noticed in any investors or prospective partners or operators that you think has made them, oh wow, these are part of the recipe for their success? Or what are some of the common obstacles or setbacks or characteristics, if any, that you've seen investors encounter that may hinder them in their process?
Yeah, I think I can tie the entrepreneur and the investor together this way, and I think I've already touched on this. But I think that an entrepreneur can sometimes be a poor investor, and the reason is, I believe, that they become an entrepreneurial investor. And again, we've touched on it throughout the interview, but I think that they chase shiny objects. They confuse investing and speculating. So an entrepreneur, in a sense, is a great speculator because they're creating something that's in their mind. They're creating a physical form for it. They're taking a dream and they're making it a reality. And that's sort of like speculating and investing. The problem is, as an investor, speculating is quite dangerous. Paul Samuelson, the first Nobel Peace Prize winner in economics from the U.S., said investing should be boring. True investing should be like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas. That's the end of the Samuelson quote. I think that investing is like is where your principal is generally quite safe and you've got a chance to make a return. Speculating is when your principal is not at all safe and you've got a chance to make a return. Now, if you're an investor and you know that you're speculating, that's fine, as long as you know that. And you should allocate your funds accordingly. If you're a speculator, then you should, again, know that, and you should realize you could lose it all. But the problem is, if you keep playing double or nothing with all your investment capital, you'll eventually, sooner than later, land on nothing. And then what will you have left to double? Right. You'll have the opportunity to start over again. That's the problem. And so as an entrepreneur who becomes an investor, if you can be really, really aware of that, you will be way better off. This goes back to one of my early comments in the show, and that is true wealth is creating assets that produce cash flow. And if you are doing that, you're really investing, not just speculating.
Great. Thank you for sharing that. I think that it was a great point in the beginning of the interview, and I'm glad that, after talking about all these things that you do at Wellings Capital, we were able to expand and tie that together. So I think that that's really helpful. I know it struck a chord with me, so I'm really excited for our listeners to hear that as well and hopefully take that to heart.
Great.
I'm curious, Paul, do you work with any clients who participate in this type of investing with their self-directed IRAs? So do you work with people who, like our CamaPlan clients, are self-directing their investments, and how does that differ? How does working with those types of investors differ from anyone else?
We do. We have quite a few investors with CamaPlan and with other IRA managers, and it doesn't really differ from anybody else. It's great to have, for us to have the professional experience of having the person, the administrator with the direction of investment form, etc. That's great. But other than that, generally it's the same type of investing experience. I realize the outcome's a little different as far as taxes and all that for the investor. But we find that in general that the folks who have IRAs like to invest both ways.
Awesome. Well, thank you for sharing that. I know it always kind of confuses me too, because I talk to all of these great guests like yourself, and I'm always like, oh well, how does self-directing tie into that? So sometimes it's nice to hear, oh, it's not that different, for sure. So one thing that you do talk about, and it's a very candid and compelling story, and I always ask our guests this question, but I'm really particularly interested in your story, Paul, because you share it as a rags to riches and backstory. So one thing I do always ask folks is, what are some of the greatest failures you experienced as an investor? Not necessarily failure in that negative sense of the word, but something that really taught you such a lesson that it informed your investment strategy and then brought you to a point of success. I like to ask people about those failure stories, those rags to riches, and backstories, so that way we can also touch on the successes as well. Is there any particular story that really touches on both sides of the failure or success, or two stories, and any major lessons that you were able to learn from them? I know you've talked about it in general in the beginning of this podcast too, but is there any specific story that you can share?
I thought we only had an hour. I'm just kidding. Seriously.
I would feel the same way if someone asked me this question too.
So I used to go to seminars, and I went to this one in particular 7 straight years. And I noticed that the people on the stage told all their success stories, and they were so happy trumpeting their success, and that was great. And I loved that. I learned from that. But I noticed the people in the room would kind of get discouraged. And after 2 or 3 days of hearing nothing about success, I literally heard people say, well, I can't make it. I don't have the opportunities they have, and I don't have the connections, and I don't have the education. And I think, wait a minute, these people are discouraged because they don't know that these people had a lot of failure on the way. And when I actually got an opportunity to meet those people and get on those stages, I realized those people had the same pains and failures and losses along the way that all the other people in the audience did. They just didn't talk about it. So I determined that if I ever got an opportunity, I would talk about failure, and I started a podcast called How to Lose Money. And we interviewed 238 guests over the last 4 years, and we heard about their pains, failures, losses, and everything else on their road to success. So I'm no stranger to this. How to Lose Money podcast, it explores that in great depth. I've had so many failures, including the wireless internet company. So we built a beautiful multifamily facility in the North Dakota Bakken region, and we housed oil workers, and we made a small fortune. Then I went out and said, well, there's not good internet in this area. Let's start a wireless internet company. And I lost a small fortune doing that. I won't get into the details. Or the time that I speculated and threw my money and then a lot of friends' money down a hole in the ground in North Dakota. It wasn't enough to earn the 20% returns or whatever from the Bakken oil wells. We were going for a wildcat well that would have hundreds of percent return. Realize I don't do this stuff anymore. And we came up with exactly nothing. And so there were many painful failures along the way. As far as the rags to riches and backstory, what actually happened was in 1997, in the fall of 97, I made a few $1 million selling our company. And exactly 10 years later to the month, I had $2.5 million in debt. And it was all against real estate, including my own home, vacation home, and then a whole bunch of waterfront lots and flips and things like that. And we were plummeting down into the 2008 recession. But remember, we didn't know that. We could only see up to that time.
Right.
And so we were hoping the downturn we were feeling from 2006 on was maybe just a slowdown that would be, it would be over soon. But around that time, my business partner came to me and said, I can no longer pay half the interest on this. I'm giving you all the debt and the assets. And so I was saddled with that complete amount. And I had a hero named George Mueller. Now, George Mueller was in Germany in the early 1800s. He was sort of a hellion in Germany. And he moved to England and became sort of a saint. And he actually housed a total in his lifetime of about 10,000 orphans. And he did all that without ever doing a fundraiser. He didn't believe in marketing. He didn't believe in asking for money. He did all kinds of radical things that shook up England at the time. And so I thought, well, what would he do if he was in a situation like me? Well, first of all, he wouldn't be in debt at all. So that's one strike against me. But aside from that minor detail, he would also do something really radical. So I decided to do the same thing. I brought my family together in December of 2007. And I said, we're in a really bad spot here. And so here's what we're going to do. We're going to give our way out of debt.
Wow.
Yeah, and that went really, they looked at me like a little bit like, okay. And then then I had two close friends who met with me at a restaurant. They bought my breakfast sausage because they thought I was in trouble financially. And they said, how are you going to do that? What are you going to do now? Are you just going to, you're going to declare bankruptcy? And I said, I'm going to give my way out of debt. And that went over real well there too. Anyway, starting January 1st, 2008, we began giving a painfully large set amount every week. And just trusting that this was going to be a path out somewhere. I really believe what you sow, you reap. And I believe in, some people call it karma. I believe in that. So I actually believe that this would be a good path to be on. And I was in big trouble either way. Well, about 4 weeks later, without getting into a lot of detail, I met a real estate developer who gave me a spark of an idea that turned into a full-blown crazy idea that I was sitting down with the county planning and zoning department 2 days later to explain this crazy idea. And they when I was done, they shook their heads and they said, we can't believe you came up with a way to circumvent our law to subdivide this waterfront property into 5 parcels. And we told you that you, and then they smiled and they said, but you found a way no one else has found in decades to circumvent the law, and we will approve your proposal. And they did. Well, the problem was it was still 2008. Nobody was buying waterfront lots. So anyway, we continued to work hard. We made a lot of calls and meetings with banks and attorneys and soil test engineers. And 13 months later, we were completely debt-free.
Wow. That's incredible. It sounds almost like, the way you tell that story, it reads like a movie in which you are this incredible protagonist who is just against all odds, really, truly believing in yourself and the fact that this is something that you can overcome. I think that the takeaway from that is huge. Thank you for sharing that story and for being so candid about it. I think that our listeners can really take a lot from that story as well.
Yeah, thank you.
Yeah, absolutely. I'm curious too, now that you mentioned it, you started your podcast, you're involved in a lot of different types of mediums too, as an educator about investing. So podcasting, and you've written as a contributor to Fox Business and Bigger Pockets, and you're an author of 3 books. So what are your processes like in terms of writing? I believe it's a weekly blog, and your books, and how is writing aided or changed the way you've looked at or act on investing? And same with podcasting. Like, what are some cool new things that you may have learned, whether it was from the medium or from your guests or from the process itself, that really have tied into the way you've acted as an investor and as a managing director?
Yeah, I can tell you that writing blogs has been incredibly helpful in helping me form my thinking. It helps with research. It's helped with just what I've even said on this show today. Started out as a blog somewhere, I imagine. And I can tell you that when I started my first book in 2007, it started out as a free special report for our website, and then another, and then I realized, these 5-page reports would actually be, I calculated, I think it was 11 or 12 pages of a book.
Wow.
And after doing 5 or 6, I thought, well, I could do a 60-page book. And then I thought, well, wait, I have only covered like 5 of the 20 topics I could cover. And so I just sat down and started writing. And oddly, I had no idea, and anybody who journals can probably agree with what I'm going to say. I had a lot more stuff in the back of my brain than I consciously was aware of. And again, we're talking about the power of the brain here. So when I sat and thought through what I wanted to write, I had very little. I thought, I don't know how this chapter is going to be more than a page. But when I started typing or handwriting, actually 20 pages flowed out.
Right, that stream of conscious, you can't take it for granted. I do it myself, and I definitely feel that pressure. If I sit down to actually, there's a product I need to create, it doesn't come to me. And then the second I start talking to someone about it, or I write it down, it's like it all flows out of me, and it's like, oh, well, there's the idea that I had months ago. So I get it.
It is so powerful. And so that was my basic process. It wasn't to compile a whole bunch of research in front of me and then start writing. I just started writing, and then when I needed a piece of research, I would go and get that piece. And I proved it out again this week. I'm looking at my screen up here. I had probably 9 tabs of research open to do this article. I was sort of nervous about writing.
Right.
You know what, Jessica? I didn't use any of them. I didn't use the tabs, because once I started writing, I had 2,200 words for a 1,200 word article before I knew it. And so that's the basic process for me.
Oh, that sounds like a great process. I mean, it's something that I know I personally, as a creative writer, I do myself. So it's really interesting to hear your take on everything and the overlaps, honestly, in the industries that I was involved in the past. And this industry now, it's so interesting. Like, it all comes down to the fact that human beings are all very similar in wants and desires and the way that the world works. So I think, it's really interesting to hear your processes and, the way that they've informed your investing. And is there any tool in terms of your research? I know, besides your relying on your brain, your stream of consciousness, and the resources you have within yourself, is there anything that you've relied on in terms of a tool or online resource or publication that maybe you go back to time and time again if you really find yourself stuck, or if there's, a very tried and true resource that you use in terms of your continuing your knowledge of investing, whether it's for your investors at Wellings Capital or for your writing processes for your blogs?
Yeah, a lot of it, part of it, I should say at least, is answering questions on Bigger Pockets forums. Bigger Pockets has, thousands upon thousands of forums where people ask questions, and, you can answer the question, you can banter back and forth with people. Right. I think that has been a good resource. But other than that, I wouldn't say that there's one single place that I get information.
Well, that's helpful to know. I think it's also helpful when you say banter. It's helpful for you to find your voice, I think, as a writer and a blogger, to be able to distinguish your voice against a lot of the noise, I feel like, that's out there in the world, probably from other authors and things like that. It helps you kind of find your own authorial voice in all of this. So I think that's great.
Right. Thanks.
Yeah, absolutely. Have you, in terms of what you've been reading, I know this is a weird year. Just a little bit last year was a weird year. Is there anything that you've been reading or anything that you've watched or any podcast that you listened to as a podcaster? I don't know if you enjoy listening to podcasts as well. Is there anything that you found interesting lately, whether it was something that started as just a source of entertainment or leisure that turned into, oh, hey, wow, this is a tool I can actually use in investing, or just anything that you found is a helpful book, movie, TV show, anything for investors to kind of circle? I mean, you've talked about mindset a lot and the brain a lot to kind of align with their own brain power when it comes to investing or anything like that?
Yeah, I think one thing would be, there's a book I keep going back to. It's by Howard Marks. He's a legendary investor. And it is called Mastering the Market Cycle, Getting the Odds on Your Side. That book has been really instrumental to helping me in getting the mindset of an investor and thinking through, what it means to buy an overpriced asset at a late point in the cycle, for example, versus buying an off-market deal in a different part of the cycle. So that's been very helpful. Another one is from the most famous real estate broker in the world, Gary Keller, and it's called The One Thing. A lot of people are familiar with that book. The One Thing.
Pardon me for sounding ignorant or anything by this. Now, when you say Keller, is that of like the Keller?
Yes.
Very famous Keller. It was Keller Williams, right?
Right. Gary Keller.
Right.
And he's the principal founder of Keller Williams Real Estate. And he wrote a book with Jay Papasan called The One Thing. And that book and the corresponding community that goes along with that book has been very, very helpful in helping remind me to stay focused for my short-term, my medium-term, and long-term goals on the one thing, which is, again, the most important thing that hour, that day, that year, etc., that will actually get me toward my long-term goals.
Absolutely. Thank you for sharing that. I think it's always interesting to hear how people, especially successful investors such as yourself, choose to spend their time. So I like asking that question to a lot of our guests. I'm also very interested, and I love the fact that, I've read that your company has set up to generate funding to fight against human trafficking and rescue victims as a way of giving back. So could you talk a little bit more about, how that came about and, how you've decided to focus on, that as your way of giving back?
Yeah, I did. Somebody told me about human trafficking in the fall of 2015, I think it was, and I thought it was something that was happening maybe around the world, maybe in the Philippines or somewhere. What I didn't realize was I did a little calculation, and I realized, at least at the time, that if you took the record profits, I don't mean the average, the record profits of Apple, General Motors, Nike, and Starbucks, added those record profit levels together, doubled that number, that's the approximate revenues generated by human trafficking every year.
Wow. Yeah.
And I thought that if I was alive in the 1800s, I would be an abolitionist fighting against slavery. And if I was an adult in the 1960s, I'd like to believe that I would have been fighting for civil rights. Well, Jessica, this is a civil right. This is slavery. And these lives have been ripped away from tens of millions of people. In fact, well over 150 people have been sold into slavery since you and I started this conversation.
Yep.
And so
these are dark statistics, but it's so, it's a very serious thing. And
so my goal is to raise awareness of that by having conversations like these, and to also, I'm helping a couple organizations with their marketing and getting their messaging out there. And my goal over the rest of my life is to do a whole lot more of that. And I would really urge people, if you don't have a big why, that this is one that's worthy of making your candidate list.
Absolutely. I love that. That is your big why, and that it is going to continue to grow, and that giving back is such a huge part of your funding and what you've generated. I think that it's incredible. And I'm curious, about on the topic of the big why, what would you say has become your big why, Paul? And what would you encourage new investors, young investors, who are trying to determine what their big why may be? Can it change is also another question I have too. And what would you encourage new and younger investors to kind of look within in terms of themselves, just based on this entire conversation we've had and how it really has centered around knowing yourself, knowing your brain. What are some things you would encourage folks to look at in terms of discovering their own big why for themselves?
Yeah, so I would look at, what gets you really fired up, what gets you really excited. And if you think, well, someday I'll reach this plateau and I'll be able to do this, I can tell you that is possible, but it's also possible to get involved in a little way today. I woke up on October 7th, 1997 with $1.5 million, almost $1.8 million actually in my bank account. And I didn't feel any different than I did the day before. I didn't feel any more fulfilled, any more joyful. I still had the same argument with my wife I had the week before. And I realized, there's got to be something bigger to live for. And I'm guessing the people that make billions feel the same way. In fact, I've heard them say that. And so I would recommend people really search their heart, search what's going on out in the world, and get involved financially, personally, etc. Even if it's in a small way, give yourself something bigger than just money to live for, because money should never be an end goal in itself.
Absolutely. Thank you so much for sharing that. I think that is a incredible way to look at it, and a really tangible way for people, especially coming out of a year like this where people have gotten a lot of time to spend with themselves, is the idea of, looking at what fires you up and what can you continue to do to get involved, I think are really great ways to just get started. Yeah. One question that we do ask all of our guests, Paul, as we start to wind down is, and I think you've touched on this with your big why, but what would you say are your keys to building wealth and unlocking financial freedom? So these don't have to be financial keys, but based on, everything we've talked about now, if you could sum it up into, 1, 2, 3 major tenets, what are the things that have informed the way that you, Paul Moore, look at success?
Yeah, you know what? I think we've touched on them in the show, and that is, again, the having assets that produce income is a worthy goal. And sometimes that will take the form of commercial real estate. It could be other types of assets that produce a fairly reliable, steady stream of income. And so while I'm absolutely not against Bitcoin or anything like that, I will say that is more speculative in nature. It went up from 34 to 37,000 yesterday, and it'll probably go down again tomorrow based on the whims, the mindset, the political, economic news, just supply and demand. But getting a stable of assets that produce income would be a worthy goal, I think. And so that would be one thing I would say. I would say, on a related note, look at the difference between speculating versus investing. I think another note would be the importance of extreme due diligence. If you can do a lot of due diligence on who you're going to give your money to invest up front, then you won't have the day-to-day hassles that my periodontist friend had. Right. He got all the benefits by investing with a third party. He gets all the benefits and tax savings and wealth building and income building opportunities of real estate, but he doesn't have to do it on his own. Like one of my investors said on a call with a lady in Finland, she was trying to figure out how to invest in single-family homes in the U.S., and she was kind of pulling her hair out, figuring that out. And she finally said, wait a minute, I need to invest with somebody who can invest my money, like a fund or a syndicator. She said, why am I working harder than I need to make less than I could? And I'd really recommend that people consider that for their real estate investing.
Absolutely. Thank you. I mean, I think this has been kind of like a chicken soup for the soul, for me at least, this Tuesday morning. But thanks so much for sharing this information with us, Paul, because I think it's so clear that you love and you care about what you do, and that your passion will rub off on our listeners. I really do believe that. And I think it'll really force people to start to look into what their big why is. I know this has certainly made an impact on me, this discussion, so I'm really excited to share it with our listeners.
Thanks, Jessica. It's been a real honor to be here, and I'm so grateful for you and Brian and the team, what professionals you guys are as far as the way you approach your podcasting.
Awesome. Thank you. We're always happy to hear that, and we hope you had fun. And one final question, actually, before we go is, for anybody listening to this podcast, how can people reach you? Do you have any websites, social medias, or any additional resources that our listeners can use to get in touch with you and learn more about you?
Yeah, we're on BiggerPockets on our podcast website, but the easiest way to find all that is to go to our main website, which is wellingscapital.com. That's WELLINGSCAPITAL, wellingscapital.com.
Great. Thank you so much again, Paul. And everyone listening, please be on the lookout for more upcoming events from CamaPlan featuring Paul Moore and Wellings Capital. But until then, thank you everyone for joining us this week on the road to financial freedom. Be sure to tune in next week to hear more from our experts who have paved their roads to financial freedom, or you can call CamaPlan today to learn more about how you can start to take control of your future wealth. Thank you, everyone. Thank you all for tuning into our podcast. We truly hope that you're enjoying your ride along the road to financial freedom so far. If you like what you've heard and learned, or if you want to hear more about certain topics that we may have already covered or have yet to cover, please subscribe, rate, and leave us a review. We would love to hear any feedback from you so that we may continue to make our podcast the best that it can be for you, our listeners. Thanks again, everyone, and remember, tune in next week to The Road to Financial Freedom.